You're listening to the Scotiabank Market Points podcast. I'm your host, Greg White. Market Points is part of the Knowledge Capital series, a collection of audio, video, and written commentary from Scotiabank global banking and markets leaders designed to provide you with timely insights and analysis. Latin America is a massive, culturally diverse region under significant stress as Brazil becomes the new epicenter of the COVID-19 pandemic, frustrating near-term reopening plans. To compound regional challenges, the retail sector across Latam lacks the e-commerce maturity of other markets, historically tied to consumers' reliance on cash. But rapid change is on its way. On this episode of Market Points, Rodrigo Echagaray, Managing Director and the Head of Latin American Equity Research at Scotiabank, discusses the regional reshaping of retail. Hi, Rodrigo. Thanks for being on the podcast today.
Thanks, Ray. Happy to be here.
So I guess first things first, perhaps you can start with a lay of the land in the retail sector across Latin America. I'm sure a lot of it is similar to what we're seeing here, but probably considerable differences as well.
Sure, Greg. Well, as you know, Latam is a huge marketplace, and in terms of size, just to put it in context, Mexico City and Sao Paulo, on a combined basis, have a population of 40 million people, which is more than the entire population of Canada. So across the region, there are different things happening in different places. There's more than 600 million people altogether, and more than 30 countries across the region. So Latam is quite diverse from that perspective. So on the macro side, I would start by saying that things were not necessarily great going into this pandemic for the most part. Argentina finished 2019 facing a full-on recession. Mexico was also, for practical purposes, in a recession, and Brazil and Chile were barely growing. Perhaps Peru and Colombia were most likely the bright spots in 2019 in terms of GDP growth. And I would say the retail sales, for the most part, follow these macro trends in general, with Brazil perhaps doing better than Mexico from that perspective. Um, I would say Chile, towards the end of the year, faced social unrest that had a negative impact on retail sales in general. So that's something that obviously is something that we need to be aware of and keep an eye on. But for the most part, I would say that retail sales in the region were not necessarily in the best shape heading into this pandemic.
What were the key difference makers then for a country like Peru that was sort of ahead of the pack? What do you feel fundamentally is behind that?
I mean, there's always, macro is always dependent on policy making. In some cases, some of these countries probably had a weaker 2018, and so that means that they're coming from a low base, and so that makes growth a lot more easy to attain. In the case of Mexico, the country is facing significant structural changes in terms of policy making, and I would say that has had some impact on growth. But I wouldn't say there's not necessarily there's anything specific around Peru than is different than the rest of the region.
If you're thinking about the retail sector structurally and comparing it to North America, what are some of the key differences that investors need to think about when they're looking at the sector in LATAM?
I would say one of the big differences, I would say there's two differences. One, e-commerce is at an earlier stage in the development relative to North America or Asia. And on the other hand, the importance of the mom and pop stores and what we call the informal sector in Latin America. On the latter, I would say for the most part, throughout the last decade, the mom and pop stores have been fairly resilient over the years. Needless to say, the health of the mom and pop sector is important for a lot of multinationals and a lot of suppliers that obviously rather negotiate terms with a fragmented space as opposed to negotiating terms with Walmex or a couple of large global players. So the suppliers in Latam have, for the most part, are happy that is the case. For cultural reasons, for convenience, of course, and also the how important cash is on the economy in some of these countries. That makes the mom and pop stores, a relatively good place to shop for many shoppers throughout the region. I would say we are starting to hear that this time around may be different, however, and the reason for that is e-commerce. Before, you we didn't really have in Latam shoppers that were actively buying online. And now I believe that some of that share is going to go to e-commerce startups, to e-commerce players. That's on the one hand. On the other hand, and as Patricia was mentioning on a previous podcast, we do believe that some of the things that we've seen throughout COVID are here to stay, whether it's home office and implications on that in terms of where people shop, more supermarket sales relative to restaurant sales. So all in all, I would say the mom and pop stores are crucial for Latam, certainly for multinationals. So it'll be interesting to see whether they come out of these alive. But what we're hearing from our channel checks is that many mom pop stores throughout the region may not survive. For example, in Mexico, there has been beer production has been deemed non-essential. So, some of these mom and pop stores that were open are not getting any beer, and so that means that they're gonna have a tough time surviving with many weeks or months with no sales. And so that kind of backdrop is what we're facing in the region in terms of the mom and pop stores.
You were saying earlier about low banking penetration being a bit of a barrier with respect to e-commerce. Can you expand on that a little bit?
Sure. I mean, we have seen that change in certain countries. I would say Brazil is a country where we have certainly seen a faster penetration on for example digital banks and their ability to grow. That definitely has been a positive story for Brazil in specific in the last few years. There's a few names that are a few companies that are publicly traded, in fact. But Mexico, on the other hand, I would say it's been a much slower growth from that perspective. Partially that's cultural. Partially that is explained by people just trying to avoid being taxed. And the perception is that if they continue to just pay cash and use cash as the main form of payment, that will prevent them from being taxed. But I think that's changing, and I think that is going to change at a faster pace, given what's going on with COVID and the fact that now people also get to have also seen the benefit and the convenience of buying online, despite the need of potentially using a credit card to pay for that. So I would say there's two examples: Brazil being further ahead in that, and perhaps Mexico being on the opposite.
On the e-commerce front, do you see some winners coming out of this situation in terms of companies that have responded strongly and are ramping up operations?
Yes, I think we believe this is a game changer for e-commerce in Latam. As I was saying earlier, for a long time, I think people dismissed the big opportunity that e-commerce represented throughout the region. I would say, on the retail side, management teams were not necessarily convinced that e-commerce would arrive at such a fast pace in Latam as it did in Asia, for example, or the US. There's also the issue of low banking penetration, which obviously prevents the growth of e-commerce. For cultural reasons, people in Latin America, they enjoy, I would say, spending more time at the malls. Um, there's probably not as many places to spend time with the family. There's not a lot of public parks, or maybe they're not as safe. So for different reasons, I would say it was perceived that LATAM it would take a lot longer for LATAM for e-commerce to thrive. And I think that is rapidly changing. What we're hearing is that in some cases e-commerce sales are growing at a factor of 5 times, 6 times, 10 times. And definitely I think some of these customers that perhaps are first time shoppers online are likely to remain online shoppers once we're through this. And so we definitely think that the retailers that invested more on logistics, on technology, and on e-commerce throughout the years are the winners in that sense. The other component of this that is very interesting is in the last, I would say, 3 or 5 years, we've seen a lot more innovation and a lot more startups coming up in just in Latam. And for the first time in many years, we've seen a lot of venture capital funds from the U.S. And I would say the best example is SoftBank, which committed $2 billion to Latam just recently. In the last couple of years, they've invested more than $1 billion of that, and so that definitely I think came in at the right time. Now the question is, will these startups have enough money to make it through the crisis if perhaps there is not a lot of funding available to them? And in that sense, I think that creates a world of opportunities potentially for many publicly traded and large retailers that perhaps may be looking at some of these startups for acquisitions or for partnerships. And so we definitely expect, all in all, that e-commerce will grow a lot more rapidly even once COVID-19 is past.
Are there any of these e-commerce startups that are seem particularly exciting for you at the moment? Any names that you can talk about?
Yeah, I mean, I would say the one that definitely comes to mind is Rappi. They're a last mile delivery company. They recently added a digital wallet component to the business, so they now have a Rappi Pay, and so they're definitely trying to become the super app of Latam, trying to replicate what we've seen in China, that worked extremely well for the tech giants over there. So I would say Rappi is one that comes to mind. The other one that comes to mind is Corner Shop. They were actually Uber recently acquired a majority stake on that. Uh, so I would say definitely the large startups look a lot more like big companies, and that is fairly new in Latam. We unfortunately don't have as many publicly traded tech companies. I would say the exception would be On the retail side, Mercado Libre, which would be the Latam, the Amazon of Latam, and they're as you would expect, are actually the best performing stock in retail year to date for obvious reasons. So I suspect that Rappi and many others will increase their importance in the marketplace in the next few years. I think that hopefully will lead to more publicly traded vehicles where investors can participate in this explosive growth, but also in acquisition opportunities for some of the incumbents.
You were mentioning Amazon a little earlier. Are they starting to sniff around for acquisition opportunities?
Yeah, that's a good question. We have argued in previous reports that we expect Amazon to be acquisitive in Latam at some point. Amazon is currently present with marketplace operations only in Brazil and Mexico. I would say they're probably doing much better in Mexico than in Brazil. Brazil is a complicated market. It's bigger. Is not as close to the U.S. And the local retailers in Brazil, the incumbents have been a lot more aggressive ramping up their e-commerce capabilities relative to the Mexican retailers in general. Um, and 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 so there's still a lot of gaps in Amazon's Latam portfolio in terms of countries. But I do think that even within Mexico, for example, I have talked about a couple of options that I think would be at least on the table for Amazon. I mean, certainly as they peak on their next battleground, it's difficult to imagine there is a much more interesting region of the world for Amazon outside of India and China, and obviously the U.S. where they already dominate than Latin America, just given the size of the pie, and just given that it's close, and given that it's Latam is still up for grabs. So yes, I think Amazon will probably be more acquisitive. I expect them to be more acquisitive in Latam in the coming years, and I think that's on a post-COVID world. I think many of these startups that perhaps were too small before might be more interesting for Amazon. So yes, I do expect that to be the case, Greg.
Speaking of expectations, in late March, while equity markets were the hardest hit, in the midst of that, you were upgrading larger players like Walmex. Do you still feel the same way under current conditions? And how much of the outperform was related to depressed equity prices at that time versus fundamentals in those companies?
I think both. And little has changed in that sense from our upgrades earlier in the year. I still think supermarkets are better positioned, not only because for once department stores are closed, but also because once stores open, unemployment is likely to negatively impact discretionary spending, and retailers are going to be facing a full-on recession globally. And as discussed previously, I also think home office is here to stay. So regardless of COVID, I think people will be spending more money at the supermarkets and cooking at home more relative to, for example, spending money at restaurants. And so I do think that my overweight, let's just say, on supermarkets relative to other more discretionary retailers, yes, it definitely has to do with the fact that department stores and restaurants are closed, but also with a post-COVID 19 world in where we think a full-on recession will mean that people will be more careful with how they spend their money, because they may not have a job, but also because I think COVID will change in many ways the how the that how people spend their money.
That was Rodrigo Echagaray, Managing Director and Head of Latin American Equity Research at Scotiabank. You can find more thought-leading content from Scotiabank on our website at gbm.scotiabank.com, and you can also follow us on Twitter at ScotiabankGBM, as well as our LinkedIn showcase page under Scotiabank Global Banking and Markets. Please refer to our legal disclosures on our website. Thanks for listening.